Hey, what's going on, investors? EBS Investor here, back with a brand new video. Today we're going to be talking about my favorite stock, IBM. Now, first I want to talk to you guys. Imagine a company that once dominated the personal computing industry, held an 80% market monopoly, patented enough new technology to keep a 28-year streak running. This company is known as IBM. This titan of the industry used to be a household name back in the mid-80s and achieved everything listed above. That was until disaster struck and the corporation was on the brink of failure. Since 1995, the company has never been the same. IBM holds some of Wall Street's largest shorts and bets against their ability to succeed. Investors and insiders bet on slow growth, loose financial status, and a massive sell-off of divisions in recent years. But under IBM's new CEO, Arvind Krishna, they have doubled down on profitable sectors and businesses and are making a turn in the market. And I personally believe that now is a perfect time to get in on this sweet stock that offers a 5% dividend yield, below average PE, and is growing their revenue and earnings very consistently. And I think IBM is growing again and is a solid contender for your portfolio. Let's jump into why.
Shares of IBM have been stuck in a rut for years. The one-time tech titan has seen its stock drop by over 35% in the last decade, but our next guest says Big Blue could be due for a big breakout. KM LLC President Catherine Avery is taking the mound for a fast pitch on IBM. She's on the fast line right now. Catherine, why do you think now? Why do you think now is the time the stock's going to break out?
Hi, Melissa. Thanks for having me. Well, this is a transformation story. And as you said, this company has not grown for years of disappointment in the earnings. But we are now in a transformation from low growth into high growth. They just spun off Kyndryl, which is their low growth business. Now it's a focus on Red Hat, cloud, software. And I think with the new CEO in place, I think we're going to start to see many more changes.
Just like she talked about in the video, I have to agree with her. We can see that IBM has been doing very well. They sold off Kyndryl roughly 2 years ago, which was their slower growing IT business and was really holding them down. In 2022, they did $60 billion in revenue, and in the fourth quarter, they did $16.7 billion. Roughly a third of their revenue comes from hybrid cloud, which is growing at 17% year over year. That is crazy to think about. A company is able to grow at that high of level for a certain division that they hold. Now, looking down, we can see that software grew at 8%. This includes their hybrid cloud platform and Red Hat and whatnot. Consulting grew at 9%, and then infrastructure grew at 7%. Overall, IBM grew at 6% revenue growth in fourth quarter, but they grew at 12% total. But you have to take into account the FX and inflation, so it was 6%. But IBM is really focusing on their profitable and revenue growing sectors, especially their hybrid cloud. As we can see, 17% year over year growth, which is pretty remarkable. You can see all of their combinations into what makes IBM IBM. You have their consulting, you have their software, and you have their hybrid cloud. What is Red Hat, you may ask? IBM purchased Red Hat for $30-some billion to make it their hybrid cloud provider, and now they own it. It's operated on a Linux platform, and IBM operates on a public as well as hybrid cloud network. They offer the best hybrid cloud in the market. Their public cloud is not as good. AWS and Azure kind of have those on lockdown. But in terms of hybrid cloud, IBM offers the best hybrid cloud. Hybrid clouds are for those really high-end clients, Fortune 500 companies. Out of the 50 biggest companies in the world, 47 of them use IBM Cloud. I'm guessing the 3 that don't are Google, Microsoft, and Amazon. So every other company besides those literally use IBM Hybrid Cloud. That's how good it is. And then you have IBM Infrastructure. Those are the big mainframe systems that we know. The Z16 platform is crazy powerful. And then they have a few other bits and pieces that add up to their total revenue. Really, IBM is a giant conglomerate that offers a bunch of services. They're always buying smaller companies, and they offer a lot that modern business needs these days. Going over to stock analysis, IBM is trading at $124 a share, and on the 1 year, the stock is up 0.5%. On the 5 year, this stock is down 22%. On the max chart, this stock is up 1,600%. Going over to the 5-day, this stock is down 2%. On the 1 month, it's down about 8%. I generally like to target this stock below $130, so I think now is a perfect time to be talking about it. A few things before we get started here. The EPS and a few of these metrics are wrong. Their earnings per share is like $6.09. So if you see numbers that look out of whack, it's because they are. But one thing investors really like is IBM offers that 5% dividend yield. You know, you're going to be getting some high quality dividends from this company. You can see $60 billion in revenue, and that is just remarkable. I want to show you guys one thing. Coming over here, IBM has been growing their revenue. $55 billion, $57 billion, $60 billion. They've been growing their revenue for the past 3 years, which is good to see. One thing that people kind of forget about, you may wonder, well, it used to be much higher. That is true. It used to be $70 billion, but then IBM sold off Kyndryl, which was, they lost about $20 billion of their revenue, and you just can't count Kyndryl because it's not a part of their business anymore. Going over some of their financials, it's not the best, I will admit. Just going to blatantly say it. IBM, you have to imagine, it's a giant battleship, and it was very slow moving. You know, they may only had one engine running, but they got rid of the bad engine, they put in a new one, and the ship's starting to turn around, and we're still in that turnout phase, where we're starting to grow that revenue, we're starting to see it, it's starting to turn, you know, it's starting to come the right way and go in the right direction, in my opinion. We can see revenue growth is in the single digit margin like they predicted. They're increasing gross profit, which is nice to see. Operating income is decreasing. Net income has decreased as well. Earnings per share is totally wrong. It's about the 6.09, 6.5 margin. So I'm not sure what's up with the earnings per share. Going over to their balance sheet, IBM is sitting on. In there, they said that they had about $8.8 billion in marketable securities. So I think some of their data may be a little bit incorrect, but it says they have about $8 billion, which is pretty fairly close. But they're sitting on a lot of assets, $127 in assets, which is pretty crazy to think about. They do have a lot of debt, you know, $55 billion in debt, and a lot of liabilities. They do buy a lot of companies. Like I said, they're a conglomerate. It's kind of like Procter & Gamble, right? You know, they buy smaller companies and they build them up, from what I understand. Going over to their cash flow, I think we already talked about it a little bit. Their operating cash flow has been decreasing. Going over to their forecast, we can see they expect a low of about another 12% drop, average about 19% gain, and a high of about a 38% gain. We'll see if that's right. But I mean, one thing about it, revenue was decreasing. They had 24 straight quarters of revenue decline under CEO Ginny Rottney. In my opinion, she failed the company, failed to innovate, spent lots of money on share buybacks and increasing the dividend, didn't reinvest it at all into the core business, and now IBM has been left in a slump and has had to deal with rebuilding itself in the business and the brand. But now they finally expect IBM revenue to continue to increase. By 2026, they expect IBM revenue to be back at that pre-Kyndryl sale of about $74 billion. The CEO and the rest of the team expects IBM to grow at a mid-single digit margin, and I would have to agree with that, and Stock Analysis' assessment, about 4%, 3%, 4%, and 8%. So I think if IBM is able to be consistent and grow at these mid-single digits, you know, you have to remember, they're doing $60 billion in revenue. It's hard to grow so much, but if they're able to do that, that'd be very consistent, very nice. You can see EPS is projected to increase as well. So good things on the horizon for this stock. Going over to their dividend, this payout ratio is wrong, but under CEO Ginny Rottney, another reason I do not like her is she spent big money on all these dividend increases while the stock price was absolutely tumbling, therefore leaving IBM with quite a constraint in having to pay out large portions of their free cash flow for dividends. Currently, they're barely increasing it at 1%, and it's about $1.65 a quarter, which isn't bad. I think IBM offers a nice potential, especially at this price. Going over to our investable calculator here, we put in the earnings per share and the growth rate. I think 7% is pretty reachable. One thing that I would like to mention is I think IBM in 2023 is going to grow at 1, maybe 2%. It might even go negative, right? But we can't think short term in all these companies, right? We need to think long term in our decisions when we buy stocks, right? IBM is able to increase their revenue at 6% and they're growing again, right? You know, all these tangible values, their cloud is growing at 17% year over year, 21% year over year the previous year. Their cloud businesses are growing again. They said once we're out of this financial slump, the thing is IBM's so international, they have to pay so much to transfer their money with FX. With FX, it really hurts their margins because it costs so much to transfer the wealth. So once FX goes down and inflation is tamed, I think IBM, like they said, even in their investors call, they expect high single-digit growth. So I think 7% is reasonable, and by my research with Stock Analysis as well as Yahoo Finance, giving us an intrinsic value of $147 a share. Now let's say IBM was able to grow at that 9% margin, you know, that high single digit, we get about $174. So I would say a buy target price would be about $150. For the sake of this in the middle, let's say 8%. And the acceptable buy price then would be $128, and currently the stock is trading at $124. I'm going to go into the summary here and explain why the stock is a buy. In conclusion, although IBM has fallen short in the 1990s and the mid-2010s under CEO Ginny Rottney, the company is still around today. I personally think IBM will be able to achieve its former self of being a conglomerate and a massive household name once again. If the company was able to survive an existential crisis in 1995 and rebound into the 21st century, shows a lot about their ability to come through. With IBM leadership doubling down on quality divisions, selling off their most unprofitable ones, shows their true colors and being focused on certain fields. Furthermore, the company has revolutionized the quantum computing space and is bringing forth new technology never seen before. This competitive advantage will serve them well in the future. Additionally, the corporation's ability to grow its cloud business year over year demonstrates great organic growth. Moreover, with the new CEO, the company is under great leadership and perseverance. I personally believe that IBM will become a titan of industry once again, led by constant innovation, ability to grow, and their drive to succeed to become a household name once again. You will not be disappointed if you invest in this stock. I think in the long run, IBM offers great value right now and is a good buy and offers a great potential for the future. If you enjoyed this video, please leave a like or comment. This has been EBS Invest. Out.